Welcome everybody once again to this Saturday's webinar series. And I'm going to share with you the entire webinar series that we have been doing and the upcoming ones before we end today. Actually, you know what? I think I'm going to share that with you earlier, just so that you can properly get it down on your calendar and your agenda so you do not miss any of these. And I know today's subject is actually very, very exciting and quite intriguing for a lot of us. And by a lot of us, I mean a lot of us Canadians. Even though I'm in Texas right now, I am traveling to take a course so that I can become a better coach, better trainer, and a better mentor to better serve everybody in the Trust Your Talent community here. On that note, though, bringing up our little slides, as you know, these are really just our guiding slides. These sessions are meant to be interactive and quite casual, to be really honest. And what we really want to do with the webinar series is to give everybody an understanding to see if this is the right strategy for me to move forward with next. Because I know there's so many strategies out there these days. And the funny thing is, there are strategies that aren't really real strategies. They're processes and models with the strategy. And so we want to make sure that everybody understands what a strategy is and whether or not this is going to contribute to your next investing and or financial goals as a result. With that said, we always want to start with a little bit of disclaimers. At Trust Your Talent Academy, we like to say that, we are here to put our educated, professional, and experienced investors' hats on. What we want to share with you at all times is real life, real time experiences and knowledge so that you are getting the best guidance possible. However, what that also means is most of us, I'm going to say that, most of us, we are not financial planners, accountants, lawyers, and tax advisors, etc. Not even licensed realtors or mortgage brokers. However, we do share with you and teach you how to work with all these licensed professionals so that you can build the most efficient and effective team as a professional and educated investor. Now, what that really ultimately means is that, and it's really funny because I was reading a Facebook thread yesterday and somebody was asking a question. What advice would you give to somebody who's just starting to look into investing in real estate or becoming an investor, period? And one of them says, if it's real estate, don't become a landlord. And I love that, because that's exactly what we teach at Trust Your Talent. Landlording is a component and a process that's inevitable when you're a real estate investor, because as a real estate investor, we are simply investors learning how to put money to work, leveraging an asset class called real estate. And so we're constantly learning financial education. And what that is, we're learning how to leverage other people's knowledge, OPK, other people's time, other people's experiences, expertise, and other people's money. Okay. So on that note, in our opinion, this really is the most powerful position to be in. Because think about it, even just the short list above in red, how many years do you think it takes to get all the certifications that you need for somebody to feel like they're finally ready to pull the trigger? How long does it take to become an accountant? Not even a good one or experienced one, or a tax advisor, or a lawyer, or a realtor, or a mortgage broker. This is not about wearing as many hats as you possibly can. This is about learning how money works and how to leverage other people's knowledge, time, expertise, and money. And I do want to share with everybody, we do encourage you to have your cameras on as much as you possibly can, unless it's a security and safety issue. So we want to make sure you stay safe, okay? At the same time, though, I do want to share with you that this video is recorded and it is published on YouTube after. So if you're a little shy for whatever reason, I'm okay with it if you need to have your cameras off. However, at the same time, like I said, this is really a public forum. Let's come in, have a dialogue, have a conversation. Everybody take something away from today's session with myself and Catherine, okay? So Again, just want to share with you the webinar series that we are doing. It's a series of 5 in addition to many others that are coming up as well. We started out with infills and project management, how to purpose build your price for maximum profit. And then we had how to create unlimited funding for your deals. As an investor, money should be your least limiting factors, okay? I know a lot of people, when they first hear me say that, they're like, no, that can't be right. And if you speak to any person, any student investor in the Trust Your Talent community, if they've been in the community for about a year or two, they will tell you that's absolutely right. Once you learn how to find good deals, money will come to you. And then you have that added accountability now to find good and even better deals. And so money will literally become your least limiting factor. However, if you're just at the beginning of your journey, it might feel differently, which means you need to go to creative financing. Then today, we are going over, especially, I know we have some American audiences today already in the room. At the same time, though, most of us are investing across the border, which means we want to talk about how to invest in US foreclosures remotely and effectively. Why are those two things so important? Because in Canada, Canadian investors, you understand that there are no true foreclosures in Canada because the court system. So in a good way, this is why we don't go through the giant ups and downs economically speaking, even though it doesn't really feel that way these days. However, that's a different discussion altogether. The thing about it is, in the US, really, we are able to capitalize and find those pennies on the dollars opportunities. And we'll dig a little deeper into that today so that you can decide whether or not this is the right strategy to go into next. And then after, how to make money in any economy, that's coming up on Tuesday evening, not this coming Tuesday, the following Tuesday. And then we're going to wrap up the webinar series with how to maximize cash flow with short-term and midterm rentals. And I believe I just saw the strategy trainer for that course logging in as well with Gustavo. And at Trust Your Talent, we call that strategy serviced accommodations. And full disclosure, I didn't come up with that phrase, okay? As much as I want to take credit for it, it's a phrase that I learned from traveling around the globe, teaching financial education. The idea really behind it is that it is serviced accommodations in every sense of the phrase and the strategy name, because we want to show you, as opposed to typical traditional long-term rentals where minimum lease terms is 12 months or above usually. We want to make sure that you understand anything less than that is called service accommodations more often than not. And then from that point on, we break it down into student rentals, executive rentals, rooming houses, and vacation rentals. And this is why we will never have a strategy called Airbnb, because Airbnb is a marketing platform that contributes to short-term rental and vacation rental strategy as part of the bigger strategy umbrella. With that said, though, very, very exciting. If you are not following Trust Your Talent on Eventbrite yet, however you found us today, make sure you take the time right now and find us. Go and find us on Eventbrite so that you are able to follow Trust Your Talent and have all the upcoming events pushed to you automatically so that you don't always have to go out there and search for it. You're not going to find another academy focusing on financial education, real estate investing, paper asset investing that puts out as much free content and in-depth content like Trust Your Talent. We promise you that. So go out there and look for Eventbrite and subscribe and follow. So with that said, today, I know some of you are already in the community. Some of you are brand new. So I'm going to quickly share with you who is Trust Your Talent. And my name is Tim, and I'm one of the co-founders here at Trust Your Talent Academy. And we are founded based out of Canada. At the same time, though, we do have the largest financial education programs and team covering strategies that are globally applicable. Again, even though a lot of the examples and case studies focus on Canada and the US, we want to let you know that all the strategies that we teach are universally applicable. And that also explains why within the Trust Your Talent community, we have investors coming from different countries in Europe and in Asia and in Africa included too. And so what does this mean? It means that we have the most diverse trainers and mentor experiences in both strategies and global markets. Every single strategy course that we put out there is 12 to 24 hours in length. That should give you an idea in terms of how much of a deep dive, the breadth and the depth of what we cover per strategy. And the most investing programs in all asset classes. We did start out with real estate because we love real estate. It's a hard asset. If you are not unsure 100% why you like real estate, you just kind of like it because of maybe somebody growing up showed you that they could buy, rent, and pray their way into wealth, and that kind of worked out for them. But you really want to do this with the educated perspective and become a professional and proficient at it. I will share with you a few episodes on YouTube later, and it's a series that we call My Daily Dose with Tim. Why are you choosing real estate as your main asset class to invest in? However, at Trust Your Talent, we also launched a paper asset investing class that will also cover all different asset classes, such as business, stocks, options, futures, commodities, precious metals. And so with that said, what that really means is we understand everybody's journey to financial success and financial freedom and financial independence is different. It's never should be one size fits all. And we want to say that before you decide to jump into a syndication, before you decide to jump into a joint venture partner, before you decide to jump into a short-term loan opportunity where you're the lender, you want to understand your level of risk tolerance. You want to understand how to make business decisions that will not only contribute to the growth of your financial situation, but at the same time, protect what you've worked so hard to earn. I think these days, with a lot of programs out there, so many people are focusing on collecting doors when it comes to real estate or scaling up, forgetting that the first step is always to protect what you have, that you can grow. And that's where financial education really comes in. Why? That's my personal experience. Before I embarked on this journey, I lost my entire hard-earned savings. And that's why it speaks so deeply to me. Way too many people forget to protect what they've earned first before they think about how to grow. And so this hopefully gives you some ideas in terms of who we are, what we do. And all coaches, trainers, and mentors walk the walk. It's important because this passion project for every person on the Trust Your Talent team, we are all full-time investors, business owners in different asset classes as well. So what that means is you are getting real-time experiences and relevant knowledge and case studies, and again, real-time experiences, because I've been in the industry now, actually in a few months will be my 10-year anniversary as a trainer and coach, teaching people financial education through real estate. Thank you. And I've just seen so many people that have been treating this as a full-time job, which I completely disagree with, because you cannot teach somebody something that you've done really well 5-10 years ago. Heck, not even a year ago. Can we all agree on that? Okay, when it comes to investing. So another philosophy that we have is it should be a full immersion experience. And that's why those of you who are in the community, you understand it's a 1 to 2 year process to really shift your mindset, to really get you going, to build that momentum. And it's okay, because we always like to say it's not get rich quick. However, it's get rich for sure. Once you have the fundamentals, you build a momentum, getting rich is inevitable. And to me, that was the part that really drew me in, because one of my biggest core values these days is sustainability. I remember working 80 hours a week, making 6 figures, but it was not sustainable. The same applies to building wealth. Okay. However, there are short-term goals and long-term goals that you can map out with your strategy coaches and your mentors down the road too, to get you there and cover all your bases at all times. Last but not least, we know for a fact the only education only academy focusing on financial education through real estate investing. Why? Because we are here, we want to teach you how to fish, not just to give you a fish. We understand that there are many times people are taught enough so that their teachers, their trainers, their coaches can sell them a deal that they're doing so that you become their OPM. That's not what this is about. We want to help you grow your financial knowledge and make independent decisions so that you can properly screen every opportunity to see if it's relevant and fitting with you. So the long-term goal is to focus on growing your sustainable income and wealth. So on that note, hopefully that gives some of you guys that are new to Trust Your Talent and what we do and how we do it a bit of an idea. Today, the spotlight is not on me. We are going to welcome Miss Catherine Butler to the stage, well, our virtual stage today, because I know we have a lot of questions. These are some of the pre-submitted questions that we've received so far. So thank you for participating. And I know some of you who register and then submit questions, you said you got work, you got kids, practices to drive to, and you're not able to be fully committed, so you're gonna watch the recording. That's all good. These are some of the questions that we've received. And I know, Catherine, just to make everything efficient, this is what we do. Aside from a lot of hand-holding, making things efficient and effective is what we like, okay? So she's got a few slides prepared to really build that foundation of understanding in terms of what is foreclosure, because funny enough, we like that word. Many of us don't actually know what it means and the process behind a foreclosure, let alone crossing the border, and let alone investing as a foreign investor. So without further ado, I'm going to hand everything, the screen over to Catherine so she can take it from here with you all. And then we're gonna come back with the questions and an open Q&A as well. We good with that? Okay. So, all yours, Catherine.
Thank you very much, Tim. Good morning, everybody. Nice to see some familiar faces and names pop up on the screen as well. I'm happy to be here. I have taught the US course for Tim for a couple of years now, but today we're specifically going to be talking about investing in foreclosures. And investing in foreclosures, that's me, Catherine Butler. Born and raised in Miami, I'm a native to Florida. Yo hablo un poquito español también. I do speak a little bit of Spanish. Growing up in Miami, not fluent, but I say that I know real estate Spanish to communicate with tenants and such. I have a bachelor's in business. I am happy to say that I fired my boss in 2000. I worked in corporate America in human resources, so I'm very much a people person, which quite honestly, that's what real estate is about as well. And I bought my very first house in 1990. And believe it or not, I used private money before I even knew what private money was. But I bought my first house, and then 3 years later, I became a landlord, and I've been one ever since, basically an investor. So almost 30 years that I've invested. And I have been a mentor and trainer since 2002. So that's a little over 20 years. And as it relates to foreclosures, why should you buy them? Well, I can tell you in the US that is one of the categories of deals or leads that is forecast to be increasing the most. And it's going to be it'll vary by market, but nonetheless, the strategy as a whole is going to be increasing. And we refer to them as distressed properties. And so a distressed property, you typically are buying at a discount, right? The other thing, if you happen to be investing or looking to invest in an area that is not increasing in foreclosures, I can still tell you that foreclosures happen every day. And so it's a way of finding deals. And one of the great things is they're off market, right? Sometimes they're on the MLS, the multiple listing service, but oftentimes they are not. So these are off market properties. And how do you learn how to do foreclosures? Well, somebody has to teach you, right? It's not something that you can readily learn on your own, but buying them at a discount, finding deals that are off-market properties, that's a lot of what we will be talking about in class. And believe it or not, state laws are actually different. So the way that foreclosures work in Florida is different than in Texas. That also might be different than in California. So we'll talk about the ways that you can invest and how you need to do so in some of the states that you may be interested in. Foreclosure process. So we talk about people being in foreclosure, but what exactly does that mean, right? At what stage are they in? In the US, what happens is when a homeowner is 90 to 120 days behind, for the most part, the lender can take action to foreclose against the homeowner. And that is what starts the process. And at that point in time, either the homeowner sells the property or they try to work out something with the lender. If they don't, the property will be bought to auction. You might have heard auction as it relates to foreclosures. And so at auction, either an investor buys it or the bank takes it back. Well, once the bank has that property, what are they going to do with it? They actually then list it on the MLS with a realtor, and we call that an REO, which is real estate owned by the bank. So currently what we suggest you do is to buy in the pre-foreclosure process. Pre-foreclosure means before auction, and you're dealing directly with the homeowner. Many, many years ago, after the crash in '08 here in Florida, the best way to buy them actually was at the final stage, which was real estate owned by the bank. It's all about supply and demand. There was such a high supply of foreclosures, and obviously many of us know that buying off the MLS isn't that difficult, but there was a tremendous amount of properties that it was easier just to buy off the MLS, and the deals were also there. I mentioned that I'm a native to Florida. I didn't wake up one day and say, I want to be the foreclosure queen. I want to do as many foreclosures as I possibly can relative to deals. What happened was I was investing. And in Florida, believe it or not, we were one of the top 4 states. So it was Florida, Arizona, Nevada, and California. We were some of the top 4 states that had the most foreclosures in '08, '09, etc. And so if you were investing at that time, you couldn't help but become an expert. And that's truly how I got to the point where I am now. So think of it as basically a way of finding deals. Once you find that deal and you negotiate it, the rest of the process is going to be similar. When is the best time to buy? Well, it's not 11 a.m. It's not September. The best time to buy is in what stage? So I mentioned to you that currently the best time to buy is dealing directly with the homeowner. Very rarely will that property be listed. So you're dealing directly with the homeowner and you're trying to help them out before they lose the property at auction. The issue at auction is they could end up losing any equity that they have because you never know what the price is going to go for at auction until it's in its final stages. So we think currently the best time to buy is directly from the homeowner in the pre-foreclosure stage. And in class, we talk about what do you say to a homeowner? How do you address some of the issues that you're having? Everybody has a story, and we have to listen to that story a little bit. How to find foreclosures and auctions. I know in the US that this is very, very different than what you guys have in Canada. How to find foreclosures is literally online. And you actually can see the documents that have been filed by an attorney on behalf of the lender. And it's a matter of public record. So you can literally look up something. I'll give you an example. In my area, you can look up by date and see the most recent cases that have been filed. And you literally see all of the documents that the attorney has filed in order to start the process to take back the home from that homeowner. And so all of that information is available online. With auctions, we'll talk about how to find auctions. And auctions, there's a lot of intrigue around auctions. And I did a mentorship in Ohio, and Ray Salazar, the co-founder of TYT, was also with me shadowing the mentorship and participating. And we had the opportunity to go to one of the auctions, and we spoke to dozens and dozens of people. And Ray has some pretty good stories about the auction. He was very interested as to how it all came together. But even if you aren't going to buy at auction, it's still a great place to go to meet people. And many of the states are moving forward with having auctions online. So you literally can be in Canada, or you can be in Mexico enjoying a little time on the beach or what have you, and actually bidding on the properties. I don't know what year Florida started, but it definitely has been 7+ years. And I can't tell you that Florida is that progressive, that we went online with the auctions because we're such a progressive state. Quite honestly, I think they ran out of space. Foreclosure auctions in the past, or depending on where you are currently, may be held at the courthouse. And in Florida, when foreclosures were so heavy, there were so many investors that were attending the foreclosure auction, they basically ran out of space. Sometimes they're held, on the courthouse of the steps, or the steps of the courthouse. I've also been to rooms within the court that they're held in Rhode Island and in Massachusetts and a few other states. They're actually held at the property. So I've literally attended hundreds of auctions nationwide because I've mentored students, as you see, from 2002. That gives me a lot of time when I'm mentoring to be able to attend those auctions. And I realize that in Canada, you're nicer than we are in the US. However, I am going to teach you to do the right thing, to be nice and do the right thing. We focus on helping the homeowner. And so, sometimes people will say, oh my gosh, you're dealing with these people that are losing their house. How could you do that to them? I'm helping them, and I'm a good investor. I would much rather them deal with me than to deal with some unscrupulous investor and somebody who's going to be taking advantage of them. So I truly look at it as what is best for the homeowner, and that's how I lead into dealing with the homeowners. Now, I'm going to tell you, if you're not going to be buying that property, because we'll talk about, if somebody wants to stay in the house or if they do want to move. If they want to stay in the house, we wouldn't end up buying it, so we wouldn't make any money. I'm going to teach you to spend a little less time on homeowners like that, but nonetheless, we're going to open with what is best for the homeowner. What is it that they would like to see happen? Doesn't mean that we can always do what it is that they're looking for, but that is how we start. So we teach you to do the right thing and help the homeowner. How to locate homeowners. So, if you happen to be, most of us know what a, vacant house looks like, right? They're in various stages of disrepair. Sometimes they look great, but how do you find that homeowner? Again, I mentioned that so many more things, information is more readily available in the US. I can also talk to you about how you could locate those homeowners directly to contact them. So we'll talk about how to locate the homeowners. And marketing, more money, right? Marketing. So I like to do a little exercise when I am teaching the class, and I put you into groups and I have you come up with some marketing ideas, and I'll also share others with you. But it gives you a great opportunity to speak to other investors and talk about how you might approach some of these people who are in a distressed situation, and the different types of marketing that we have, and all of those types of things. That can all be done no matter where it is and you're operating your business remotely. Equity sharing. So I just like to use little numbers since I'm not teaching you math, but we talk about equity sharing. If somebody has a house worth $150,000 and they owe 100, there's $50,000 in equity that they stand to lose. So if that property goes to auction and it sells for 100, they lose that $50,000 in equity. That's one of the reasons that it works out better for us to deal with the homeowners. We can give them, helping them, give them an opportunity to get some of that equity. And so if you were to buy the property at $100,000, they're not going to make anything, right? So why would they bother to sell it to you unless they just don't want to have the foreclosure on their record? But it's an easier strategy if you were to share in that equity. So you don't end up buying the property per se, but you get it sold and share the equity. And so we'll go through the steps in being able to do that. And rather than putting 20 or 25% down on a property, right, we may put money out of pocket to stop the foreclosure. So that gives us a little bit more time in order to get that property sold and share the equity with the homeowner. The opposite of equity sharing is short sales. And they're not called short sales because they take a short time. You're actually shorting the note. And so I'll give you the opposite example. If the property value is worth 100, but someone owes 150, right? They're $50,000 upside down. So we are shorting the note, and there are ways to work through that. You can deal directly with the directly with the lender in order for them to accept less than what is owed. So those are called short sales. Back in 2008, when we had the big market correction, specifically in Florida, there were so many of foreclosures, but also the short sales because property values declined. And so many people owed more than the property was worth. And so that was a very popular strategy back in the late 2000s. Whereas now you're dealing directly with the homeowner because a lot of people do have equity. So it's almost the opposite of the way it was before. And that's kind of why we teach you all these different strategies. I'll stress, on the strategies that are current for you today. However, you need to understand all of them because your market may be slightly different, or of course, over time, things are going to change. Auctions. So I mentioned I've literally been to hundreds of auctions. There's an auction I've been to in Maryland, which is close to Washington, D.C. And so anybody who I've mentored that has worked or lives in Washington, D.C. or Northern Virginia or in the state of Maryland even, we end up going to one county in particular because it's one of the least expensive counties. And for investors, that helps our numbers work oftentimes. And so I literally have been to that auction so many times that I've gotten recognized, where somebody will point and say, I know you, I recognize you. And so it's kind of funny. I've literally been to that many auctions. As I mentioned, more and more of them are going to the online platform. And even if you couldn't, if it's not an online platform, you still would be able to get somebody who would be able to bid at the auction for you. For instance, in Chicago, which is in Illinois, I met a woman there who literally, that's part of what she does, and she charges a fee, of course, but she will go to the auctions and bid for you. In Chicago, they have 3 auctions a day. And so they are in various locations. They are relatively downtown, but that's completely different. For instance, in Texas and Georgia, the auctions are held once a month on the first Tuesday of the month. And most of them, as I mentioned, take place at the courthouse or they're online now. Some of them do take place at homeowners' homes, which is really pretty embarrassing. In Connecticut, they put up a big, like the size of a flip chart, piece of, I don't know if it's painted, I haven't touched it, but a printed piece of paper that's mounted on wood that literally publishes when the auction is going to be held. So it's very, very public in that circumstance. And in Connecticut, the auctions are held on Saturday mornings and an attorney conducts that auction. So as I mentioned, they're kind of different from state to state. You likely are not going to start investing if you're looking at focusing on foreclosures, you're likely not to buy directly at auction starting out. You must pay cash, and you don't have the opportunity to sometimes even get inside that property, let alone have an inspection conducted. And so it's an as-is strategy, right? And you have to have cash. You when you're starting out, that can be very risky, right? If you can't see the inside of the property to truly know what the issues are with that property. If they don't have utilities, that's another issue, right? You may not know what things work and what things don't work. So auctions is likely not where you are going to start, but know that it's something, a lot of people, when they hear about foreclosures, that's kind of all they know about is auctions. And I will tell you that more people that I've met over time know how to go to auctions, and that's all they know as it relates to foreclosures. They wouldn't know how to look up the documentation when it gets filed with the county at the court. They wouldn't know how to access that information or to contact the homeowner or even how to go through that process. And currently, that's where many of your deals are. And it's also because there's less competition. It's public information, but many people are waiting until that property goes to auction to be able to participate in investing in foreclosures because they don't know the pre-foreclosure part. Others will even go to properties that have waited until the bank foreclosed on them and listed them on the MLS. And those in the foreclosure process currently are your worst deals because, as many of you know, on the MLS, many properties are marketed at market value, right? Especially in markets that have been hot, it's harder to get a discount. That's why it's more important for you to find these off-market properties. We talk about liens. So at auction, is it the first mortgagee that's foreclosing? Is it the second mortgagee that's foreclosing? Are there other entities that might have an opportunity to place a claim on somebody's property if they didn't pay the plumber or the roofer, what have you? Mechanics liens can be placed on property. You need to understand how those liens are going to affect the deal that you're doing. And in particular, that's as it relates to auctions. And so we'll cover lien priority, and it's very important just to know how it works. Many states, not many, several states have a redemptive period, and it's basically a rewind of the auction. So the property gets sold at auction. So an investor buys it or the bank takes it back, but the homeowner has an opportunity to redeem that property, which, depending on the state, I mentioned Rhode Island and Texas, the process goes rather quickly, but in Illinois, it takes months and months before the process goes through. But some states have what's called a redemptive period, where you would not want to focus on working on that property until that redemptive period has expired. For instance, if I won the bid at auction on a property, and if I didn't know that redemptive rights that homeowners had, they don't have them that long here in Florida, but if I didn't, let's say I was in Alabama, they have a redemptive period. If I wasn't aware of that and I started rehabbing the property, and then I was either going to sell it or I was going to rent it, if the homeowner were to redeem their property back, they would only pay what I paid at the auction or what they owed the lender. All that work that I would put into the property, I would not get back, whether it was sweat equity, paying a contractor, material, what have you. So it's important to know what states have a redemptive period. And we also have an opportunity that you might be able to eliminate that redemptive period. And how would you go about doing so? REOs, as I mentioned, is the last stage of the foreclosure process. REO stands for real estate owned. So it's real estate owned by the bank, and it's literally a department in the bank that manages the foreclosures. So if the property doesn't sell at auction and the lender takes it back, they list it on the MLS with a realtor. And so they're called REOs. We'll also talk about how to calculate an offer. So, a lot of times students, you're looking at the property, you're trying to determine what strategy you want, but where do you start? How do you know how much to offer for that particular property? We go through and you'll learn all of the costs that are associated until you resell that property. how do you go through the process? And some of that'll be US specific, but how you go through the process and what are some of the costs that you need to take into account in order to determine what your offer is. We'll also talk about determining ROI, which is your return on your investment. That's really important, right? We all want a high return. And last but not least, we will talk about financing. Financing will be similar, but not identical to the way that it is in Canada. And so we'll talk about some of the differences that you might encounter and some of the opportunities that you'll have for investing in foreclosures in the US. All righty, Tim, I'm officially finished. Do we want to open that up for Q&A?
Yeah, let's do that. So, oh, I'm seeing myself again. There we go. Okay, these are the questions that, again, have been pre-submitted. So, for example, how do I access foreclosure deals in the US if I'm not there in person? And Catherine did address that already. And there's lots more opportunities. I remember when I first got started, it was not as easy. And there was definitely no online auction in the late 2000s before 2012, 2013. So, and I think, you know, if we go down, I mean, actually, you know what? I'm going to put it back into the room. Like I said, this is meant to be interactive. You see the list of questions here. If there's something that you really also want to know, put your hand up, or just put your hand up and ask your questions right now. Okay, so I see that we have Richard. Go ahead, Richard.
My dear Richard, great to see you. I look forward to hugging you next month.
Oh yeah, you get that from me and also from Kevin.
Absolutely.
So I once had an interesting conversation with a homeowner whose home is getting foreclosed on. And when I approached him, he's like, oh, I don't really need your help because I am going to file Chapter 7. And once I file Chapter 7, the court is going to put a stay on my home and I won't lose my home. And I did a little bit of research on that. I don't think he's guaranteed to stay. So it could be that he's very ill-educated. But I'm curious to hear whether you've dealt with homeowners who's being foreclosed on and file Chapter 7 at the same time, and what's the best way to navigate in terms of their pain point and how we can help.
That's an excellent question, Richard. And the way that the bankruptcies work is a homeowner gets an attorney to file bankruptcy. They include the house in the bankruptcy, and then the lender files to have the house removed from the bankruptcy, and then they proceed with the auction. So it will, and Richard used the word term stay. So they will be granted a stay, meaning an extension. It'll pause the auction, but it won't pause it forever. So it takes a little bit longer, but then the next step is for the bank or the mortgage company to file and have that removed from the bankruptcy.
Okay, so he's just ill-educated. It's still gonna happen. It's not gonna be paused forever.
Right, but it'll be delayed.
It'll be delayed. Okay. Okay, thank you.
You're welcome.
Thanks, Richard. Adam had a question. What about acquiring a mortgage in Canada for a US property? Okay, so I'll handle the first part of that, and then Catherine, feel free to jump in after as well. As Canadians, the funny thing is a lot of the major banks now have the US arms, and they're all offering mortgages in the US. And in all honesty, even just two short years ago, they were only offering mortgages to Canadians to buy in the US if it's a second home, meaning it's considered a principal residence that you have. However, they allow snowbirding, so to speak. The update is that as of July this year, from what I know right now, especially the blue bank with the yellow or gold lion, however you want to look at it, as Canadians, they actually will offer mortgages now for Canadians to purchase rental and investment properties now. And we've also confirmed that they will go into small multis up to A-plex, as long as the debt servicing coverage ratio is meeting the criteria. And even more importantly, for some of you, this may be applicable. if you have private banking with the Blue and Golden Lion Bank, they will have very favorable terms because I believe, because I do bank with them myself, I do believe that they are looking to expand their market share through this particular strategy. And again, we've always talked about, and this is why many of you will start with our real estate investing financing fundamentals when you start your program, is understanding that mortgages are like products on a shelf. That's how I usually like to compare it, is that you walk down the cereal aisles, you'll see different cereal brands, different flavors, different shapes, different sizes, different colors, different, all sorts of different packagings as well. However, let's just say you walk in today, it looks a certain way. 3 days later, you run to the grocery store and you go down the same aisle. All of a sudden you're like, well, hang on a second. I thought I got my cereal like right here, but they've shuffled it around, or maybe it's gone. Maybe it's out of stock. Maybe they've discontinued it. Whatever the case may be, I want everybody to think about mortgages like literally products on a shelf. It changes on a day-to-day basis, literally. Okay, so I wouldn't get too overly hung up on that. At the same time, what you want to know really is that, are we able to borrow? Absolutely. And at the same time, I think that it kind of goes hand in hand with the second question. Do I need to have a ton of cash? I kind of reworded that. The original question was, do I need a wad of cash with me to do this strategy? And so here's the thing. Everybody's got a different approach with this. Cash is king, especially in the investing world, as we say. At the same time, though, do you always need a ton of cash ready? No, but I'm gonna let Catherine handle this as well, because when you go through a certain bidding process or the auction process, a lot of the times the answer might be yes. So Catherine.
Yes, you are correct, Tim. You do have to pay cash or certified funds at auction. May not be your cash though, right? It can be OPM, other people's money. But basically what that means is you don't have the opportunity to finance. They typically need the money at the time of auction, by the end of the day, within 24 hours. Different states can have different parameters, but basically you are going to have cash at auction. However, as it relates to other properties that you may be buying in the US, there also is generally financing available in the US for you as well. So I believe you would likely get better terms if you could get it out of Canada, but know that there are options for you in the US as well.
Awesome. I have a quick question.
Yes.
What about the down payment? Like when you are, do you need like 20 to 35% when you're applying here in Canada per se? Or what if you're applying down in the US? Like we're able to get a mortgage. How much do we need to be putting down?
Typically it's going to be at least 20%. And that's why using private money, you could use private money for even the 20% down. And so as foreign investors, you're likely going to have to put down closer to 25 or possibly 30%.
Yeah, I thought so. That makes sense. Thank you very much.
You're welcome. Jose, great to see you as well.
Hi, Catherine. ¿Cómo estás?
Bien, ¿y usted?
Muy bien, gracias. Good to see you, eh?
Yes.
Hi, Tim. Good Spanish. I just have some questions here quick. Well, you told me about you already just said about the the bidding, how it works here, because I heard it was cash. So yeah, you said yes, it has to be like that. And I have another question. I have a lead right now with a person, and he says he's trying to save the property. He had a court in August 13. I call him back. He said, "Hey, Jose, I have another court date, November. Call me after that, and then we can talk." What are these courts? He's trying to save the company. He's trying to save the property. How is this possible? How, like he owns like 100,000. What is he gonna do?
He may have even been filing bankruptcy. I don't know what he's going to court for, but the lender also, it's in Florida, I'm assuming, Jose? Okay. Yes. So the lender has to prove that in fact they have the mortgage, and they have to go through a process. And so it might have been delayed for one reason or another. what will happen is the lender goes through the process in Florida and they basically get their granted judgment. So they win the case, the bank wins the case against the homeowner, and then it's scheduled for auction. So once they have what's called the final judgment, he will have some time before it goes to auction. Does
And
that
then
help you?
Yes, and then it's when I can buy it.
Correct. But you'll
Okay,
have to
so
move
that's what it's
quickly.
Okay.
It depends on how quickly the lender is going to schedule that auction. But I will tell you, Rhode Island and Texas are the two states that it happens the most quickest, the very most quick time. And the longest, as I mentioned, was Illinois. So you have some time, but it's actually also, Jose, lender dependent, which I know sounds really strange. Somebody else was asking, how long does it take? And it depends on your state, but it also depends on the lender within that state and what their mood is at the time. So like back in, 08, 09, lenders were moving very slowly because they had so many foreclosures. If they listed properties on the MLS, they were competing against themselves. So right now there aren't quite as many, but it depends on how quickly the lender wants to operate. But I would recommend once, keeping in contact with him. And I'm not sure what he's doing. He may say that he has a potential buyer. Maybe that's why they're extending the auction, or maybe he paid a little bit towards the amount that he owed, and that's why they're extending the auction. There can be different reasons as to why there is a postponement.
Another thing I want to ask you quick. We use PropStream a lot to filter down foreclosures and liens and stuff like that. With your experience, we try to filter down minimum 20,000 and then above. Because, if you look at, for example, a property that owns $1,000, you don't want to go after that person. $1,000 is nothing. So what's your number that you will qualify above 20,000, above 10,000, above 30? What's your number?
I wouldn't do 20. 20 would not be enough for me, because even if you look at closing costs, that's going to come out of that 20. But what I tell investors too, when there are, let's say there are 100 foreclosures filed this week, what you want to do is deal directly with the homeowner. So those 100 that are filed, and you can eliminate some. So let's say that 20% are in the low income area where you don't want to be. 20% are in, they're overlooking the mountain or the lake or what have you. That's in an area you don't want to be. Now you've reduced that down to 60. And in Florida, you might say, oh, I don't want condos. Now you have 50 leads that you're working at. And in class, we talk about you having, sending the marketing according to how much money is owed on that property. Those that have a lot of equity, Jose, we even teach, we even teach that you can knock on their door. Obviously in Canada, you're not going to have that option, but you would have that option here in Florida for you to be able, if there's enough equity, it warrants your time.
Okay.
Does that help you?
Another thing I want to say here quick, I noticed we have 3 flips and 2 of them are pre-foreclosure. They're really good. But I want to say a lot of them are looking for cash, a quick close between 2 weeks approximately. So just for you guys to know, as a foreign national, what I've seen somebody ask is between 30 to 40% down payment as a foreign national right now. So yeah, that's all I want to say. Thank you so much.
You're welcome. Great to see you. Will I see you in October?
No, I won't be able to.
We'll miss you.
Okay.
All righty.
All right.
Anybody else?
Yeah,
go ahead.
We have a question from Amit, and because he's in the office right now, so he's worried that the background noise is going to be a little too loud. He says, what I'm curious about, once a property is deemed 90 to 120 days delinquent, how long can the foreclosure place on average?
So it's going to vary by state, and as I mentioned, by lender. In Rhode Island, and as I said, in Texas, it happens much quicker. So if the lender gets approval in Texas and the auction is on the first Tuesday of the month, well, then the next Tuesday or the one after that. So it's going to be within 2 months, likely in Texas. That's how quick it's going to be. But in Illinois, their process can take a year or more. Even in Florida, I've had cases that have taken way more than a year. Generally, they don't take quite that long, but I wouldn't even give you an average, Amit, because it's state specific and lender specific. And it also depends on, you know, how many other foreclosures that they have, etc. So you have some time to deal with it. Texas, as I mentioned, is one of the quicker states.
Awesome. Cool. I mean, I see you nodding, so I'm hoping that answers your question.
Okay, good.
Awesome. Okay, coming back to our list here quickly, is that can I buy foreclosure properties directly from the courthouse, and how share a little bit about that? So we did answer that, and we'll go into details in the 3-day course as well. What's a typical foreclosure process in the US? Walk through that. Where should I start with this strategy? I don't know if the person that asked this question, by where you mean at what point in the process, or is there a certain market? Is that is it a geographical question? So Catherine, depends on how you want to answer this. Where should I start with the strategy from your opinion?
Yeah, I'm going to go with the process. So at what point in the process should you be working the deal? And as I mentioned, it's once the notice has been filed. So once the lender takes action, right? Somebody's 30 days behind, 60, 90, maybe 120. It could be longer than that before the lender files. But when the lender files, that's how we learn about it, because it becomes public record then. So that truly is the best time. You're dealing with the homeowner, you're helping them, right? For a profit, you're helping them, but also less people are working that stage of the process. If you wait until auction, I've literally been like in Long Island, New York, there were hundreds of people at that auction. Now, I've also been to auctions where no one showed, and I was there with my students. So you have all extremes, but generally speaking, currently the best way is to deal directly with the homeowner. So we call it the pre-foreclosure stage.
Absolutely. So I want to quickly jump in on that, because again, we have a lot more Canadians investors than US-based investors in this room tonight. Today, I'm so used to saying today. And right now I'm actually making an offer on a foreclosure, because all foreclosure properties in Canada also by requirement need to be listed through a brokerage and through an acting realtor. The realtor doesn't really know anything when they list a foreclosure property other than the legal process that has incurred. So right now in Edmonton, I'll give you an example. We have a foreclosure property asking for $385,000. So to give you some idea, it's in a decent neighborhood. It's what we will call an A neighborhood. The house itself has been framed, and the outside exterior has been pretty much 90% completed. Yards, nothing, no foundation, just a post holding the whole thing up. It's been drywalled and framed, okay? And it's got a roof on it, so when there's rain or snow, it's gonna be okay. But when we went to see the property, there was puddles in the basement. There's no heat, no gas, no plumbing, nothing, okay? So everybody's got that picture in your head now, right? Okay, let me give you the timeline right now. The timeline is the previous owner that got foreclosed on, he purchased this property hoping to do a complete flip in 2018. What year are we in? 2023, okay? He got foreclosed on in 2018. It's taken the court system this long to put it back out on the market. And because this is in Edmonton, Alberta, there is an open bid policy. What that means is once a trustee or a law firm has been assigned, they basically collect bids. Once it's been listed, or it doesn't have to be listed. It could be a pocket listing once a brokerage has been appointed. And so the court acting on behalf of the court, the lawyers or the trustee will now collect open bids, meaning everybody's bid is wide open. They are obligated to share. Let's say I'm now, apparently, if I'm making an offer, I'm the 5th offer. They've already told me what the other offers are at this point. And they're asking on MLS list, asking for 385. How much of a foreclosure opportunity do you think there is? I am now, as soon as I found out the numbers, I know I'm bidding against amateurs who watch HGTV and think they can do a flip property. Because again, as investors, we all know let's start from the end goal in mind. How to calculate your numbers, like what Catherine was saying, how to calculate your return on investment. We know based on the last 6 months sold comps, that property, once it's finished, it's roughly about 3,000 square feet, 4 bedrooms upstairs with a beautiful main floor. So it's a nice house. Like I said, it's in an A neighborhood. And that's why it even piqued my interest a little bit, okay? And it's really not too far from where I live. So it was easy one day after the gym to go and take a look. And so what this means is the sold comps came back at anywhere from 660,000 to 925,000. It's a big range, big range. What's changing that? Obviously, yard sizes, condition, the quality of the finishing, all those things at this point, right? However, $300,000 almost is a huge gap. Where do you land on that? But I already found out that there's somebody that is bidding $500,000 on it. Okay, let's do the math backwards. We always say, I don't know, well, I always say, maybe it's because of my Asian genes, I'm very conservative when I run my numbers. So at $660,000, again, yes, recently what got some good news, or really no news at all, is the fact that the Bank of Canada did not raise overnight rates whatsoever, which means interest rate is not looking to go up at this point, which is injecting some more confidence. You know, we've all heard these buzzwords and emotional words that sway the market and the amateur investors. A lot of people are thinking, well, rate's going to come down, right? So they're bidding it. But let's just run the numbers backwards. Even at $660,000, well, when we sell it, we're selling it through a realtor. In Alberta, it's a different commission system, but we're just going to use 5%. Okay, so 5% on $660,000 in sales is $33,000 plus our GST. We can't forget to pay taxes on that. So let's just say $35,000 rounded up. So $660,000 right off the bat, losing 35K, 625. If somebody is paying $500,000 just for that plot of land, okay, that means the spread is $125,000. We already know that it is going to take at least $200,000 to finish the whole thing, if not more. Clearly, this is somebody who's thinking, wow, okay, I can potentially sell this for well over $900,000. But they're not counting legal fees, permits, wait times, connecting the site services and holding costs, and potential cost of borrowing and delays. There will always be delays, by the way. Those of you who have already taken real REI fundamentals and distressed properties, you know how to calculate those numbers in. And so the process next is that once the court collects all the open bids, because the lawyers now decide if it's worth it to present the court with the offers that they've received, because the court's best interest is to protect the lenders. They are looking in Canada to recover as much as they possibly can, as much as they possibly can for the lenders. And unlike a province like Ontario, we are not a power of sale state, meaning the more they can recover, the more the lenders will get back, and the owner will not get anything in addition to what they own, what they've owed. Okay, and so this is why, again, so many times I wish this strategy could work in Canada. However, it just would take so much work, so much time, and way too many variables. And this is why when it comes to this particular strategy, we are encouraging educated investors to look south of the border. This is really the only strategy that I would say you got to do it south of the border. Okay. So hopefully that kind of gives you a bit of an idea and some comparison as to why that is. Okay. And is the strategy for me? Who is the strategy for? Is that a question that somebody might be interested in, or anything else? Any other questions that you might have? No? Yeah, I want to share a quick story too. It just kind of came to me because over the years I've seen literally investors, or really they're real estate buyers, as we keep saying. There's a difference between real estate buyers and real estate investors, because all investors are buyers, right? All thumbs are fingers, but not all fingers are thumbs. All investors are buyers, but not all buyers are investors. So literally over the years, I've seen people that go and bid, and they get into the excitement and they buy at auction, and only to find out that, oh my God, they're gonna be upside down very quickly. And then I've also had a student that went and bid, and this was a happy surprise. After she won the bid, when they were combing through the titles, she found out that not only did she buy the foreclosed property on the plot of land, there was a piece of land that was attached to it that was actually part of that title, but it didn't show up. And so all of a sudden, she can now subdivide, and because it was a corner lot, she was able to actually decide to knock it down and exercise other exit strategies. She could do an infill into a 4-plex, 6-plex. I believe 8-plex was the biggest that was allowed on that plot of land. So you have a wide range of opportunities here. It's just that, again, you definitely want to be more closer to the latter. Again, it doesn't happen all the time. At the same time, I want you to kind of picture that spectrum of possibilities. Okay, I see Richard's got his hand up. Catherine, you want to say something as well?
I do. And, like I said, many people only know about the auction relative to foreclosures, but there's a lot of risk there. As I mentioned, you might not be able to see the inside of the house. If you haven't done your research, maybe it's a second mortgage that's foreclosing and then the original mortgage is still owed, right? I will tell you, the person who typically buys at auction is a general contractor. And because they do the work, they can do it cheaper than us, right? And if they're doing so many of them, they're going to walk into some properties and say, oh man, the pipes are gone. They're going to walk into other properties and say, the appliances are still here, right? So because they have so many, and if they're doing that many, they can afford to make less as well, right? Economies of scale. So that's who your typical investor is at auction. Number one would be a general contractor, because it's right up their alley, and they'll resell for a profit, etc. Richard, what do you have for us?
So in terms of quote unquote helping the homeowners that are facing foreclosure, in addition to just taking over title from them and buying them at a discount so it's off their hand, do you also do creative financing stuff like buying it and leasing it back to them, or setting up a lease option so that they
actually you could? I say that you should not keep the homeowner in the home. In fact, I say never, ever, 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 ever keep the homeowner in the home. And the reason for that, Richard, is that one of the reasons that they're going to be selling to you and not me is because you've established rapport with them. And so, people buy from people they like. So if you are going to sell it for them, right, or you're going to buy it from them, they like you, but they're going to expect you, if they become your tenant, to help them again. And so I like to cut that tie. But you might also be able to help them. Maybe Tim has a lease option somewhere, and you can still help them by introducing them to that potential deal. And so there are ways that we can help them. Where we start is, do they want to stay or do they want to go? And we talk about the ways that we can help them if they want to stay. And remember, we're only going to spend this much time, because if they stay, we don't buy it and make money. But if they're ready to leave, then we have more options for them. Even if they want to stay, it doesn't mean they can. If they say to you, well, I've been unemployed 6 months and I haven't made a mortgage payment and my industry has died, I don't know when I'm going to be able to find another job. Well, I'm sorry to be the bearer of bad news. However, the lender is not going to allow you to stay, because how can you make your payment? If they found a job or if there's a situation, then the lender might be more willing to work with them to fix that. But just because they want to stay doesn't mean that they qualify to stay.
Okay, so what I'm hearing is you don't want to play the dual role of buying the property and doing the lease option. You wanna cut that line clear. I'll buy and I'll introduce you to someone else to help you, but I don't play.
Correct. Yep. And I feel strongly about that, Richard.
Thank you.
Gary. Cool. Awesome. Well, hope that everybody's got something out of this webinar, and I know you might have other questions, so I'll show you how you can reach out in a little bit, especially for those of you who are not already in the community. Everybody else that's in the community, you know who you can go to for support, for question and answers. I want to share a little bit more about the other upcoming events that are happening live. So everything else, all the webinars are going to be coming to you virtually on Zoom. At the same time, next weekend, we have a live financial education workshop in Toronto focusing on real estate investing. And for the very first time to the public, our paper asset investing program as well. Space is limited as of today. I think we only have about 5 seats left in the room now. These are imposed limits by the venue, so make sure you get yourself registered if this is the starting point that you need to have. In fact, this is the starting point for most, if not all, Trust Your Talent students and investors. And with that said, if you're not in the Toronto area or next weekend does not work for you, we have another one coming up in Vancouver that is happening in parallel with our annual conference. So that workshop is actually a 3-day workshop, October 27th, 28th, and 29th. You're able to find both of these events on Eventbrite, or I will share with you how you can actually get a huge bonus incentive when you register directly through the Trust Your Talent website as well. And speaking of the workshop, what you can expect from the workshop is that we're going to cover hard strategies and soft strategies that every investor needs to know to be well-rounded before they pile any more on. And on that note, as I mentioned, we are going to be debuting to the public, because we've already done that internally, our paper asset program for the very first time during these workshops as well. And the workshop is only $297. We know the value of what we're presenting is well over $10,000 at the same time. We want you to get a head start and just to really see if this is the right choice for you. I think a lot of people, and I'm just going to be flat out with everybody, real estate investing may not be for you, may not be for everybody. However, at the very least, you don't know what you don't know. Do yourself the favor and go to a workshop. If it's live, great. If it's online, awesome. And come and discover for yourself which path is the best for you. You're here already, which means you are looking for ways to expand your financial education and to grow your wealth and income. So do yourself a favor, take that next step and register into a workshop to discover for yourself. And so on that note, our annual conference that is happening once a year by definition is over the weekend of October 27, 28, 29. So for those of you who have young children, don't worry, you will make it home for Halloween to take your kids trick-or-treating, okay? Now, at the conference, we have 5 strategy courses. Each course is happening over 3 days. As I mentioned, every strategy course that we teach goes in depth. And so anywhere between 12 to 24 hours at this conference, it's closer to the 24 hours mark with real estate investing, fundamentals, and distressed properties. As Catherine mentioned earlier, foreclosure properties tend to be distressed properties. However, when you go to distressed properties, you will learn the definition of distressed properties does not always mean run down houses. More often than not, yes, they do go hand in hand because maintaining properties takes money and takes sweat equity. At the same time, though, foreclosure is a financial state and a financial judgment, as I mentioned in the chat before, which means that you are also learning how money works, leveraging real estate and properties as your asset class. And that's one of the classes. Creative Financing Level 1 will walk everybody through how to leverage joint venture structures as well as register funds as Canadians to invest in real estate. And then we have serviced accommodations, infills and project management, and last and certainly not least, US foreclosure buying. Catherine's going to be joining us live in person in Vancouver, walking us through how we can leverage US foreclosure buying as a strategy as foreign investors. So those are the 5 courses. Remember, I know a lot of people have asked this question. Does that mean that I get to go to all 5 that weekend? No, you pick one and you dig deep into one strategy, which means the second question now that I usually get at this point is, oh, but I really don't know which one is the best for me. And that's okay. Those of you who are in the community, check with your strategy coach or your mentor. However, if you're not, I'm going to show you how, and you can get some help. We're all about the hand holding, like I said. At this point, I want to share with you, when you register for these courses and our annual conference online through our website, we are able to give you an incentive. And that incentive is 50% off of the published rates. As long as you use the promo code TYT ROCKS, you are able to get that. And I will show you, like I keep saying, it is all about hand holding. I'm going to walk you through it once, no different from a mentorship process. If we can walk you through the process from beginning to the end once, how much easier would it be for you the second time around? And it gets easier and easier. It's a process of duplication. So annual conference registration is right up here, or workshop registration is right up here. The same promo code works. The same promo code works for all the events that are on our website directly. So I'm going to go into the annual conference registration to show everybody, to demonstrate the point. You will get descriptions on what the conference is all about, some videos, and the different courses that are happening. And as you can see, the listed price is $4,997. You will be fed most of the times during the conference, okay? So when you are checking out, I'm just gonna say reserve your spot. Upon checkout, as long as you put in promo code right here, TYT ROCKS, doesn't matter, uppercase, lowercase, apply code, you will see 50% off right off the bat. Okay. The same applies to the workshop. So now you know, instead of $297 for the workshop, it is actually 50% off of that for two people, for up to two people. So take the opportunity, get yourself started, get yourselves to the conference. And I'm going to come back here now and show you, like I said, if you're kind of thinking, I don't know, I'm not quite sure what's the right move, what's the next right move for me? Well, start your coaching calls with one of the strategy coaches. We have 4 strategy coaches ready to support you, and how you can get in touch with them very, very easy. By simply going to trustyourtalent.ca/appointment, and you can get that started. Okay, so let them support you, help you pick the right next move to move along in the process and towards your journey for financial success. Everybody's definition of financial success is a little different. Remember, not one size fits all. So do yourself a favor. We don't charge for these calls. Get yourself started, engage in a conversation. That's the least you can do. And I usually like to say at this point, you do owe it to yourself. You've made the time to be here for yourself already. Take that next step. And so with that said, I did mention how you can stay connected if you're not already connected with us. On YouTube, if you search for Trust Your Talent, you will see our channel and you will come across my Daily Dose with Tim. There have been 3 seasons so far, countless hours of knowledge, not just information, financial education, real estate investing, knowledge and education right there for you. And if you are wondering if real estate is the right asset class for you, write this down. Season 2, episode 6, 7, 8, 9, 10. Season 2, episode 6, 7, 8, 9, 10 goes into discussing why real estate as an asset class for you. For some of you who are kind of wondering, okay, well, where are we in the real estate cycle? Because I kind of want to pick the best time to jump in before I start buying. Great. Season 2, episode 56. And really the answer to that question is, if you're unsure about when to start acquiring, I think you've jumped the gun there. Start learning first. I like to say, and I've had a major aha. Many of you know that I'm in Austin, Texas right now because I'm taking a coaching summit, meaning I'm learning how to become better at training others and helping people reach their goals. And my biggest aha right now is, especially when it comes to investing, this is the best time since 2008 to actually learn, because the opportunities that are coming up, as Catherine's touched on with the foreclosure strategy too, is immense in the next 2 years. Many of the effects of the financial situation and the economic ups and downs that happened in the last 3 years, we haven't even seen the beginning of it yet. The ripple effect is just starting to start. So this is the best time to start getting yourself trained properly so that you can make the best decisions and the best investment decisions, not buying decisions, investment decisions. So on that note, I want to say thank you for joining us. Thank you to Catherine for popping in. And we're super excited to see everybody either at a workshop or at our annual conference in Vancouver. And on that note, enjoy the rest of your Saturday and your weekend. I'm going to go back to my course now to keep learning too. And we will see you when we see you. Have a great rest of the day. Bye, everybody.
Thank you, Tim. Great seeing everyone. Thank you.